Technical analysis versus fundamental analysis. Bear versus lion. Strongman versus bodybuilder. Pizza with white sauce or pizza with tomato sauce. These are questions that have plagued humanity since time immemorial. But today I'm going to answer one of them, which is, what's better, technical analysis or fundamental analysis? Now, the short answer, and this is what most people will say, is simply, it doesn't really have an answer. Because you can make money with fundamental analysis, you can make money with technical analysis, you can make money blending them. Personally, I use all three. I use pure fundamental, pure technical, and a blend. But what's better? There is an objective answer to this. And the objective answer is technical analysis. And I'll explain why. So, if you're a fundamental trader, this is actually still important for you. So don't skip this video, listen to what I have to say. It's going to affect how you trade fundamentally as well. So the idea here is that there's a trading philosophy and an investing philosophy. Now the investing philosophy is more long-term, trading is more short-term, but you can use all of these analyses for each type of trading. Now I say there's an objective answer to what is better, and the reason is this. You have to think about why markets move. Markets move only because people are buying and selling. That's the only reason they move. If I buy something, the price is going to go up because I have to reach into that bid-ask spread and move the price upward. If I sell a stock, the price has to go down. So it's all about buying and selling. That's the most basic way of thinking about the stock market. It's a supply and demand issue. Now, why does this matter? Well, it matters because if you look at who's buying and selling, you can go back and think about why they bought or sold. And if they bought because of fundamental analysis, and most people buy because of fundamental analysis, clearly that's the main mover of markets. But if most people are buying from technical analysis, then that has to be the main mover of markets. In either case, if one's stronger than the other, that one has to be more influential on the stock market, and you should probably learn it, or at least learn how it affects the stock market. Now, you already have my answer. I said it's technical analysis. Why is it technical analysis? Well, the stock market is split about 50-50 between real people and between machines, algorithms, high-frequency trading hedge funds. It's about 50-50. You got people, you got machines. Now, let's not talk about people for now. Let's talk about the machines. Are they using fundamental analysis? The answer is no. These machines are not going to be, in most cases, they're not going to dig through news. They're not going to look at financial reports. They're not going to look at the products of a company and dive into consumer psychology and that kind of stuff. Instead, they're just going to look at the technicals. That's all they do. So already, we haven't talked about people yet. Already we know that half the market is purely technical analysis. So half the market is moved by trades that were made based on technical analysis. Let that sink in for a minute. At least half of the market is moving because of things like moving averages, gaps, support and resistance levels. These are all things unrelated to technical analysis. We're not even looking at the company. We're not looking at what the company does. We're not looking at the management of the company. All we're doing is looking at charts and graphs. So it's purely mathematical. Half of the market is moved by that. Now, let's bring people into the equation. When people trade, how many of them are trading and how many of them are investing? Well, this is a hard question to answer. I've looked at the data. I can't come up with an answer. So let's just, for the benefit of the doubt, just say half-half, all right? We've got half the people trading and then we've got half the people investing. And it's probably a split, 1/3 each. 1/3 of the people are using technical analysis, 1/3 of the people are just looking at the fundamentals of the company. They're usually long-term investors. And then 1/3 of the people are using a little of both. They might look at the company, they think it's a good company, and then they look at the technicals and determine when is a good time to buy, right? So, if that's the case, we're dividing things up, and we look at half the market being moved by technical analysis, and the other half of the market has 66% of the people employing technical analysis, half of which use purely technical analysis only, and the other half will incorporate technical and fundamental aspects. So what you have is about 75% of the market having technical analysis as an influencer, whereas you might have only something like 33% of the market or less being moved by the fundamentals. And that's what we're seeing actually in the American stock market these days. We see the stock market kind of out of control because the fundamentals simply aren't there anymore. We have stocks that are way above what they should be priced at if you look at certain valuation models, if you look at most valuation models actually, and you're still stable. We've been stable for a long time in this 8-year bull market. It's not going to stay stable, but the fact that it's been pushed so high and is staying so high means that people are trading based on the fundamentals. And that's going to be true pretty much forever, and especially as algorithmic trading and high frequency trading continues to increase, because this was not a thing 20 or 30 years before. 20 or 30 years before is pretty much all people. Nowadays, you've got hedge funds moving as close as they can to New York so that their hedge funds can use their computers just to automatically trade, and they'll do things like order scalping, which is pretty much impossible for people to move the market without even thinking about it. So, before you decide whether you're going to be a technical or fundamental trader, keep that in mind. Realize that you might have the right idea, as I have many times, but find that the market moves contrary to your idea. So the fundamentals might say this stock is going up, but then you see the stock go down. That's common in this modern market. So at least be aware of the fact that technical traders have a lot of power, and machines, technical traders can be machines or people, they have a lot of power in moving markets. So if you're going to invest just because you think it's a good company, it's a little dangerous, not completely dangerous if you have really good reasons, especially for an overall macro idea. For example, oil is going to continue falling, that's pretty clear. But if you have a good idea about a company, well, you might want to look into a little bit of the technicals of that company before you decide to trade. If this has helped you, please click like, subscribe for more videos like this, and please in the comments section let me know your requests for other videos, and I will make them for you.